So hiring in the U.S. started the year at a stronger pace. For a closer look at the broader impact of the first jobs report of the year, we're joined today by Greg Buchak, professor of finance at Stanford Graduate School of Business at Stanford University. Professor Buchak, thanks for joining us today.
Yeah, thanks for having me.
So what does this latest report tell us about the current state of the U.S. economy and the labor market?
Sure. So as you said in the report, the U.S. economy added about 330,000 jobs, and the headline unemployment rate fell slightly to 4.3%. So just viewed in isolation, these are good numbers. But there are a lot of caveats. So the first big one is that there were major downward revisions in the 2025 numbers. So total job creation was about 400,000 jobs fewer than previously estimated. Now, these jobs data, they're always preliminary, so there's likely to be some revisions. Today's revision was kind of unusually large and basically meant there was very little aggregate job creation in 2025. Now, there is net job creation now, but this job market has been characterized as being what people are calling kind of a low fire, low hire market, meaning there's just very little turnover. And especially people who do lose their jobs, they tend to struggle for a while to find a new one. And then the other big caveat is a lot of the job creation was in the healthcare sector. So if you take away that sector, other industries actually lost jobs. The fact that job creation is so concentrated in this service sector is kind of a concern. So headline numbers are good with some caveats that point to some structural weaknesses in the economy.
I see. And the Fed said last month that it's in no rush to cut rates despite, pressure from Trump. And they cited a stabilizing job market. What might be the Fed's next move? What's your outlook for interest rates for the rest of the year?
Sure. So if you just taking a step back, the Fed has this dual mandate of low unemployment and low inflation. So lowering rates tends to spur investment, and this leads to more employment, but it also potentially causes inflation. So therefore, when the Fed is kind of making these rate decisions, they're thinking about trading off these two concerns. So before today's jobs report, I would summarize the current situation in the U.S. as inflation being sort of stubbornly higher than the Fed would like, but also a labor market that's a little bit weaker than the Fed would like. Now, in light of this trade-off that I mentioned, the Fed has been sort of right on the edge of wanting to lower rates versus keep them steady. The jobs report that came out today it's positive enough, I think, that it gives the Fed room to hold off on cutting rates a little bit longer. So I just don't see them moving for a bit. I think that the folks at the Fed are really waiting for more decisive labor market data, and today's report just wasn't that decisive.
I see. And today's jobs report comes, as the U.S. stock market has been undergoing major shifts recently. How have markets responded so far?
Yeah, so markets today were pretty much exactly flat in response to the news. They didn't go up, they didn't go down. The headline from the jobs report was good news, so you might kind of wonder why stocks didn't go up a bit more. So a few things, as we've been discussing, this is a good headline number, but beyond that, these caveats make it not such a rosy picture. That is the revisions, the healthcare concentration, and so on. And then second, what actually drives a lot of pricing in markets is beliefs about future rates. So in particular, lower rates tend to push stock prices up. And all things considered, this jobs report sort of makes the near-term rate cut less likely, and that expectation weighs down on stock prices, which can kind of offset the relatively good labor market news.
Right, and investors have been cautious ahead of this jobs report and other key economic data to be released. And this week, Bitcoin fell to its lowest level since Trump took office. Why is this, and what should investors be watching for?
Yeah, so I'll say a few things about crypto in general and Bitcoin in particular. So, crypto is an asset. It doesn't pay dividends or generate cash flows. So if it has fundamental value at all, it sort of has to come from its usefulness. There is some recent innovation around things like stable coins, which are crypto assets pegged to normal currencies, together with some regulatory innovation like the Genius Act that just passed in the US. This is intended to make these assets a little bit more useful in doing transactions, and that's kind of an interesting developing area. Now, Bitcoin is outside of that. It's a little bit different. So like these stable coins, it produces no cash flows, but it also has a very limited transactional use. It's slow, it's energy intensive relative to established currencies. Really, its main comparative advantage is mostly around facilitating like illegal or otherwise restricted transactions that the ordinary payment system won't touch. It's also very volatile, so it makes it a poor store of value. So the question is, why is it valuable at all? Well, if speculators are willing to buy it at high prices, the price can be kind of self-sustaining. But that equilibrium where people are willing to pay a lot is unstable and very fragile. It can unravel easily. And a lot of market microstructure events can have a big impact. So for example, there are some reports around this big decline in price that suggested there was a single large seller that put pressure down on prices. Now, if you're a participant in this market, you see that and you're kind of wondering whether that's a one-off or if the whole sort of equilibrium that's keeping prices up is dissolving, and they may sell in response. And that's kind of has this cascading effect. And I think that's a little bit of what was going on here rather than something that was linked more to Bitcoin's fundamentals or fundamentals in the economy. So, all in all, these large swings are expected because there's just not a lot of fundamental value there. I wouldn't really tie the move to something deeper, aside perhaps the rise of these competitor stablecoins.
I see. All right, Professor Buchak, thank you so much for your time and insight today. We appreciate it.
Yeah, thanks for having me.